Constructing the candlestick lines. Without oars, you cannot cross in a boat. We're going to learn about what candlestick charts are and what candlestick lines are, and the terminology in the stock market when you're looking at a bar chart during a live session and you're looking at the stocks go up and down, go bearish and bullish. The colors in this book have already been predetermined so that we can understand what candlestick charts are for example purposes. So for example purposes, they use the color black and they're going to use the color white. And we're going to understand the terminology and how to read a candlestick chart. Candle charts use the same open, high, low, and close data as the traditional Western bar chart. So if you have an iPhone or a tablet and you go to this app called Stocks, you'll see the traditional Western bar chart. You have the option of changing your bar chart on most programs to your candlestick chart. Prices seem to jump off the page on the candle chart. It presents a stereoscopic view of the market as it pushes the flat two-dimensional bar chart into almost a three-dimensional aspect. Candle charts are visually stimulating. The rectangular section of the candle lines in Exhibit 3.4 to 3.6 are called the real body. The real body represents the range between the sessions open and close. When the real body is black, for this example, it means that the close of the session was lower than the open. If the real body is white, for this example, it shows that the close was higher than the open. The thin lines above and below the real body, above these rectangular boxes, are called the shadows. These shadows represent the session's price extremes. The shadow above the real body is called the upper shadow, and the shadow below the real body is called the lower shadow. Accordingly, the peak of the upper shadow is the high of the session, and the bottom of the lower shadow is the low of the session. Another terminology is if a candle line has no upper shadow, it is said to have a shaven head. And a candle line with no lower shadow, it is said to have a shaven bottom. So basically, I'm about to sum it up in my own words so that I understand a little bit better. So these rectangular boxes to my right, the way they work, for this example, black, when you're looking at the chart, it means that it's bearish. It's going down. The flow of the chart, when you're looking at it during a live session, the bars are going to be going down. It's bearish. That means they're selling, they're losing. Basically like the bears, they have a losing record. It means that the close of the session was lower than the open. And the real body in this example, the white box, is bullish. That means they're on some MJ type crap. They're winning, they're 6-0. They're buying, it's going up. And so that means in this example, it shows that the close was higher than the open. And the thin lines above the rectangular boxes are called shadows. So the thin line on top of the box is called the upper shadow, and the thin line at the bottom of the box is called the lower shadow. If there's no line at the top of the box, they call that a shaven head. And if there's no line at the bottom of the box, they call that a shaven bottom. There's more terminology when looking at these candlestick boxes and lines, this is just the start of it.